Happy Tuesday. Hope everybody had a solid long weekend. All right. Let's jump in. So today is Tuesday, January 26th, and it is 10 after 4 Eastern Time. And I am an associate member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA SIPC. All trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. Since the last time I did a public afternoon meeting, I added on Snap. And then today, I decided to keep a little bit of this Mara that I traded, which was super hard the way that they broke that kind of beginning of the day low and didn't even close that great on a day 3 to the downside. That Mara's down like working towards 50% from its high 2 trading sessions ago when the ETFs got announced. I'm not necessarily a believer in this company. It's just a trade. So I wouldn't expect to see me in it for too long. I'm not a believer in crypto at all, if we're going to be totally honest. At the end of the day here, the SPYs closed down 0.34%. The Qs are pretty much exactly flat, and the IWM is a bit of a problem. Russell lost some important support today and closed down over a percentage point. This is on the backs of the TLT being down 1.8%, so big boost today for interest rates, and the dollar being up 0.9%. So some interesting strength coming into the dollar today. So bonds up, dollar up, bond yields up, I should say, dollar up. Not so great for risk assets, especially for these IWM names. Let's talk about it. So intraday price action here on the SPYs, relatively sloppy. There was a good long opportunity at this early kind of opening low, which we called out. I was slightly off on the call out. I called it just like a little bit early. The bar prior to that, before it closed, looked like it was trying to build out a little bit of a downside tail. It didn't. That low broke. The candle after kind of gave you your extension downside tail for the snapback to equilibrium, which, like we see a lot of times in the beginning of the day these days, overshot just that 8 to 21 EMA zone. Actually pretty much fully filled the gap for the SPYs, and then the afternoon trading session was pretty sloppy. The Waller comments, Fed's Waller, came out at 11 o'clock today, which caused some initial volatility. It didn't seem like he said anything new to me at all, but when we first downticked, I was like, well, the market originally turned up in such a big way off his comments previously. He's probably viewed as a dove who is in some ways leading the charge of the interest rates moving lower. And then his comments, again, they didn't say anything new. I think they just said everything that the Fed is saying. Basically just, we are reviewing potentially lowering rates, but it's in line, I think, with what the Fed has forecast for interest rate cuts this year, and not necessarily what the market has been pricing in. And that's been the biggest problem that I think has weighed on the market to start off 2024 here, is that the market is probably overpricing in what these Fed cuts are actually going to look like. I've seen this in different ways, I feel like, over the course of the last 2 years now, where the Fed funds rate gets completely out of whack with what, the Fed funds futures get completely out of whack with what the Fed is actually saying that they're going to do, and then what the Fed ends up doing is exactly what they say that they're going to do, and then the Fed funds futures and interest rates have to reprice over time to get back to what the Fed actually said. So I think that's what we're seeing here a little bit with this TLT kind of breaking back down. We're well off those December highs. I think it's just a matter of how well can the market actually hold into this down move, and what's going to get hurt the most. And it makes sense that the IWM is going to get hurt the most. So let's take a look at the IWM in a second. The SPYs and the Qs. So what we discussed in the morning meeting today was the important downside levels. This morning is a technical gap into this equilibrium area. This is technically an area where you want to come in and be a dip buyer. Your momentum line in the sand, if you will, on the downside is Thursday's low. Thursday we got this kind of continuation hammer is what I call this candle, where you get a downside tail within the confines of an uptrend that goes into equilibrium. So there, sellers tried to come in and take control in the beginning of the day, but the buyers stepped right in, bought the dip, drove us back up. So from a momentum perspective, just give me 1 second. I gotta fill it on a position. From a momentum perspective, you really don't want to see that Thursday low get lost. So that's the first spot we were talking about, and that is 472 spot 26. The low of the year from January 5th is a spot where if that breaks, then this market uptrend that we're in becomes questionable, and then maybe we're looking at a change of character for the market. But I always think that a great thing to do with trading is just to kind of assume that the status quo is going to remain the status quo. If there's an uptrend, assume that that trend's going to last. If there's a downtrend, assume that that trend is going to last. You always need to look at other pieces of evidence that can give you an idea of if something might be beginning to change. But I'm certainly a believer in the keep it simple, stupid method of trading. While you're in an uptrend, gap down into the equilibrium area within an uptrending market is generally something that you want to buy as long as you're continuing to hold above all support levels. So it's kind of the game plan for today with the SPYs. Qs were the same deal. Thursday's low is your momentum spot to pay attention to. The low of the year, I think, is your change of character spot to pay attention to on the downside. But a gap down into the ADMA this morning is technically something that you want to look to buy. The problem, and it is certainly a problem, is this IWM. The IWM did not bounce the way that the SPYs and Qs did off January lows. And I think what you see when you look under the surface in this market right now is once again a market that isn't showing great breadth, isn't necessarily super healthy, which this is something that gets a lot of chatter when you have bad breadth in the market. Is, well, once those leaders roll over, which in this case is like your AMD and Nvidia of the world and some of the other big cap tech companies, then watch out below, and the IWM could be like a canary in a coal mine. But I've never actually seen that play out with any consistency, to be totally honest. I feel like I have seen as often every stock catching up to big cap tech as I have the leaders roll over to end kind of the uptrend of the market. So we'll see. We've dealt with this divergence plenty of times in the past, and it's usually looking like this, where the Qs are really strong, they're leading the market higher, they're helping the SPYs to be able to push. The IWM is relatively weak, or RSP is relatively weak to SPY, just because not a lot of stocks are participating. And this IWM pullback off of the December highs is getting pretty healthy at this point. Just eyeballing it from highs down to today's low, you're probably looking at like a 7% pullback or something like that in the IWM. And if you look at some stocks are actually pretty beaten up so far this year and haven't really caught any bids. Some of those names are actually even on our watch list for today. Penn being an example of that. We cited in the morning meeting today that there's some stocks that are actually having like a day 5 gap down this morning, even though the SPYs and the Qs are pretty much at highs. And we might be able to look for an oversold bounce or an RDR in those names. So Penn was the one that I kind of brought to the table in the morning meeting. That actually worked really well, this Penn. If anybody bought it off the open, we called it out within 5 minutes of the market opening that you could be long versus the opening low off of the strength there, or be long for an RDR back through yesterday's low, just kind of for that snapback trade. So with it, and it's actually impressive that Penn was able to work, because you kind of needed the IWM to work, I think, for some of the beaten up stocks, because they're going to tend to be more correlated with the weakest index to go. And the IWM couldn't do it. We were ticking above 192 today. 192 is the key spot. We needed to close above 192, I think, in order for the market to still be healthy and still be intact, the Russell at least. And we couldn't get it. And not only that, but we lost Thursday's low. So Thursday's low for the SPYs and the Qs, that's the momentum level. For the IWM, it's not even the momentum level. It's the kind of do or die level, to not to be overly dramatic. Um, but yeah, this IWM is certainly an issue right now. You can see RSP today was down 0.6% versus SPY being down, 0.3 and change. So you've got a little bit of a different picture as well with this RSP versus this SPY, where RSP just hasn't really bounced off January lows at all. As a matter of fact, made new lows for the year today. So we're in a market that I wouldn't necessarily describe as healthy. The IWM is a concerning signal, but at the same time, I have to figure out a way with my trading to kind of justify the different messages that I'm getting, because there have been plenty of times over the course of the last couple of years where we have seen similar situations and they actually end up resolving to the upside as long as these Magnificent Seven names continue to hold in. And, once again, Qs are flat on the day, IWM is down over a percentage point, and I think that makes sense when you see the TLT move the way that it did. So that's kind of where we're at on the big picture. I'm trying to say that the trend is my friend. I'm trying to stick with this to the long side, but I got to be honest. I'm kind of concerned with the message that the IWM is giving us right now, that this could lead to something more for the SPYs and the Qs on the downside. But I'm not ready to jump into that until I actually see the SPYs and Qs lose levels, which they have not lost. And if anything, they're all looking pretty decent at this point. So that's the market as a whole. As far as stocks go, it was a little bit of a mixed day. I thought that there were some really good trades out there. The pen I already mentioned. This Mara, there was both a really good trade there, and I would say it was frustrating at the same time. We were looking at these crypto names, again, not necessarily that I'm a believer in them, but just for a trade on a day 3 gap down to see if we could look to be long, like kind of versus some support levels or pre-market lows, or look for RDRs or something like that. And this Mara, initially after the crypto ETF news, traded to as high as $29.19. That's just Thursday of last week. Today traded as low as $17.18. That's over a 40% pullback in 3 trading sessions from the high to low. That's impressively bad, I think, especially when you consider that, crypto has pulled back, but it has not pulled back the way that Mara or Riot's, the other one, have pulled back. Huge downside moves in these, or even Coin. Coin was actually probably the best one today. It was not my focus. We talked about Coin, I think, long in this, it's like 125 to 130 area for an RDR. That one was pretty much green all day. Mara was the one that I think a lot of us focused on. Josh had a great call out at lows for the team. And it was just ended up in some ways being the worst performer. It was the worst performer on a percentage basis. It was the worst performer just in terms of how it was holding in relative to the other names on an intraday basis. But it was definitely a solid call out from Josh. We had noted the $17.50 level pre-market this morning as being a really important level for this Mara, and it overshot that by about 20 cents at this low. Josh called out the long somewhere in that 1740, 1750 area. I think even on the way up, and that was a pretty good trade, but it was disappointing. You got up to this $19. I still had plenty of stock. My thought process was that you could look for a snapback in Mara to, maybe $20.50, $21, something like that, if it trades properly and actually gave that RDR, just for a trade. But when it got back up to this $19 into this gap fill area, it just faltered there, and then it just seemed like, and I know because I traded it all day, it just seemed like there was this heavy algo seller on these moving averages throughout this entire midday trading session that eventually was able to break after 2 o'clock, only after the stock actually broke lows. So it sounds like a bunch of people that were in this initial pretty good trade got stopped out completely on the break of new lows. I got stopped out of, not everything, but I got stopped out of a good chunk of stock at those new lows as well. And then they were able to kind of break this intraday downtrend, get back above the moving averages, and give a little bit of a lighthearted bounce that still isn't even too much to write home about. Just frustrating because if you chose to trade Riot instead of Mara, I think never even got close to breaking the opening low. Or if you chose to trade Coin, versus Mara. That one also, not only did it never even get anywhere close to the opening low, it actually held in near highs pretty much all day. So really what Coin did, and it could have been any of these names, really what Coin did was what I was looking for from all three of them. And Mara just happened to be the one that, for whatever reason, I've been focusing on just from a trading perspective ever since the crypto ETFs came online. So good trade there, I think, off Josh's call out, but it was also difficult. Have to talk about the semiconductors because this was on the list this morning. NVIDIA, I mentioned it in the morning meeting for the inside and up off this bull flag. Though I felt that NVIDIA was the harder trade because of its degree of extension that it still has from the ADMA on the daily, and it has now, but at least pre-market, the ADMA on the daily had not yet caught up to even that bull flag base. So a lot of times it's difficult to be able to get the continuation there, but it continued anyway. NVIDIA closed the day, right now it's up like 3.25%, but AMD was the winner. AMD up 8.75% here at the end of the day, almost 9%. AMD was the winner. You know, this was probably my most conviction on the long side in the morning meeting today, and it worked out really well. You just had to pay up a little bit to get stock. The original idea that we had discussed was being long versus yesterday's high, which is 148.75. So if you paid up to 150, you know, you took on $1.25 risk in the most relatively strong stock pre-market that was out there. That's not a terrible risk reward, honestly, for how AMD moves. I wanted a little bit better pricing if I was going to give to yesterday's high. We also discussed in the morning meeting real briefly that you could probably buy the open as a momentum trade versus 149.70, which was something on the pre-market. I don't remember what exactly that looked like a decent little downside level. So the trades to the long side for AMD were 1,000% there. We discussed it in the meeting, and if anybody caught it, it was a phenomenal trade. Not only was that a call out in the morning meeting for the long side, but as a team, we actually were able to kind of nail the top and nail the short. Maybe not perfectly. I know the way that I think Pat traded it and the way that I traded it was kind of building in. I think I started shorting at like, I honestly don't exactly remember, 158 and change, 158.50 or something like that. And I was adding on the way up into this 160 area. I think the best short sale I got was 159.50. Covered a good percentage of my position into this first down move. I reshorted a little bit into the up move, but we discussed that was actually a different trade than the first trade because now you don't have the extension there. And if anything, you have a pivot off that equilibrium area. But then when it kind of found equal highs here or double top or lower high, whatever you want to call it, got a little bit of a deeper pullback that I was able to fully liquidate my position in. So I actually didn't catch the AMD long, which I'm fine with. I didn't really feel the need to rush into that because I still do have this NVIDIA long position, but it was a great call out there. And then at the same time, we were able to, you know, kind of flip that thought process to the short side off of what was dramatic extension into that 160 area. This thing did not touch its ADMA until on the 5-minute chart until 11 o'clock, after 11 o'clock this morning, which is pretty rare. I think Pat at one point said I haven't seen the stock stay in a 90 plus RSI on this 5-minute chart in a very, very long time compared to what AMD was able to do today. So it wasn't easy by any means. You really had to kind of stick with the trade in that area. But if you didn't get pushed out, if your sizing was appropriate, you were able to make a few bucks there. I do want to say what I always want to say when it comes to these trades. It's great that I was able to make a few bucks short AMD. It's great that Pat was able to make a few bucks short AMD and anyone else that was involved in that trade. What's the easier money, guys? What's the easier money? Do you want to be trying to fight the strongest stock in the market off of extension to the short side, or would you rather just be long from 150 to begin with and then be $9 in the money and then saying to yourself, oh, well, gee, it's getting a little bit extended up here. You know, maybe I need to be looking for an opportunity to book some profit, right? So yeah, that's obviously the easier money, and that's really what I would prefer for us as a team to be focusing on than trying to do this counter trend stuff in these super, super, super strong names, even if we are able to be calculated and make a few dollars in it from time to time. the headache of it, in my opinion, tends to not be worth the overall reward potential. So I think that covers everything that I've got. These other big cap tech games are kind of disappointing. I was able to trade some Apple back and forth and make a few dollars in it. Amazon I ended up avoiding. It was relatively weak in the beginning of the day. Google was also on the list. It gave a little bit of a bounce at one point in the beginning of the day, but then also broke the opening low and was a little bit of a tricky trade there as well. And then the Goldman just stayed sloppy and never really cleared that 385 that we talked about in the morning meeting, so there wasn't anything to do there either. That's all I got. I am happy to take a look at what you guys have. First, I want to take a look at this chart from Dave S. in the VTF, where he's giving me the NASDAQ Russell comparison chart that he was showing us for a while when the IWM was playing a little bit of mean reversion initially and catching up there in the end of November and December, and you can definitely see that in the chart that Dave is pointing to here. And then this is even worse than I would have expected it to look like, Dave, to be totally honest. This pullback here in January, just in the relative trading between the NASDAQ and the IWM. IWM is massively underperforming, and that goes to show you what I'm talking about kind of this underlying weakness that's in the market, this potential canary in the coal mines that we need to be paying attention to, with certainly realizing, because we've seen it many times in the past, that a lot of times the Q's holding up eventually lifts everything back up with it. Question from Christian in the VTF. When trading off a level at the open like AMD today, does it make sense to check if the ADMA on the 5-minute chart caught up with the level like we would do if we were trading off the low of the day? I'm nodding my head yes. Today I did not take the AMD because I thought it looked too extended, and I'm trying to figure out if it was the right thing to do or not. Sure. So we can take a little bit of a deeper dive on the AMD execution. So I struggle personally. I've talked about it a lot. I am kind of a with trend trader. I'm a with momentum trader, but I'm not necessarily a momentum trader, if that makes any sense. Meaning, I don't like to buy things that are very extended, looking for even more extension. I like to trade a little bit more to kind of be right or wrong. So, in my opinion, if you wanted to buy AMD in the beginning of the day, right at the open, the spot where you really knew that the long idea would be wrong would be if it lost yesterday's high. If you lose in yesterday's high after this degree of a gap up, and honestly, even with that, maybe yesterday's low, but let's just say yesterday's high. If you're losing yesterday's high, you're stopping yourself out. You're saying, hey, I had an idea. I put my risk on. My idea was wrong. My trade failed. I'm out of the way. And I can just about promise you that even if at the very second the market's opening that AMD, the ADMA wasn't at yesterday's high, that's going to catch up so quickly because the gap is so big that, part of the reason where I know that my idea was wrong as well, or I should probably say it the opposite way. I can get stopped out of a trade and not know if my idea was wrong if the ADMA hadn't caught up to my stop yet on like a 5-minute chart, because I'm just getting shaken out because of volatility around extension. And then I'm just getting pushed out because it was too extended, my stop was too tight, and then it goes. So again, if you really wanted the trade to be right or to be wrong, I think that the right stop loss was yesterday's high. And then you're taking like, $1.25, $1.50 in risk, which is a lot for AMD. And you should ask yourself if it's right for you. It's not an unreasonable amount of risk, in my opinion, either. We know that AMD can move $10 to the upside in a day like it did today. Heck, it did it in an hour and a half, right? So you could come in and you could take that $1.50 risk and you could get, a 10x move on a good volume confirmation day, a good relative strength day like AMD did, and maybe the move isn't even done yet. Maybe this thing is on its way to 175, and then that became a swing trade for you, and then you got a really good risk reward. So one way to do it, if you trade a little bit more the way that I like to trade, where you're trading to be right or wrong, is to take on that additional spacing risk, give it down to yesterday's high, maybe you don't have as big of a position, and you're looking for the bigger reward. The other way to trade it, though, and again, this is not the way that I prefer to trade. I will trade this way sometimes, but it's more of the momentum stop loss. So we talked about in the morning meeting, and I specifically called it like if you want to trade it for momentum, you can use this 149.70 is what I mentioned as a stop. So you'd be buying off the open, whatever 30-40 cents risk versus that 149.70, but the stock could easily trade down to 149.50, stop you out, create a pivot there, the ADMA catches it, and then it breaks up, then it goes, and then you're sitting there with a loss, and the trade's actually working. And that's specifically why I don't really like trading this way. But we do have people on the team, Judy as an example, who are like more pure momentum style traders than I am, who might want to take that trade and say, I don't care about being right or wrong. I care about I'm here to trade money. So I'm gonna buy versus this tighter stop loss, and I'm looking for this kind of immediate gratification momentum move. And if I don't get it, then I'll stop myself out and I'll reassess. The benefit of trading that way is that you can take a lot more size with tighter stops, and then when things work, you're going to have a lot more size and you're going to get really good risk rewards. The problem is, for me at least, the probability of getting pushed out of the trade and having it still work, there certainly is that probability, and you need to know yourself as a trader. I know myself as a trader. If I get pushed out of momentum style trades like that, where I don't actually know that my idea was wrong, I tend to fight the stock, I tend to churn the stock. And what ends up happening is when the idea really is wrong, I'll sometimes churn that thing so many times because like, oh man, I got stopped out and now it's ticking back up in my favor. I knew I should have given it more room. I'll churn that thing so many times, I get stopped out so many times that I find that I'll end up actually, if the trade fully fails, losing more money than if I just gave it all the way down to yesterday's high to begin with. Again, that's me personally. You need to know the type of trader that you actually are. If you're the type of trader where it's just like, hey, this is how I trade, I'm trading money, I'm buying my stock, here's my stop loss, I'm trading with the momentum, I want to see what move I can get, and you use that, you can see there's kind of a pre-market pivot here at 149.70. Use that 149.70 as your stop loss. Well, heck, you could be getting a lot of stock as soon as this thing opens for relatively tight risk. You could have way more stock than I probably would have if using yesterday's high as a stop loss, and honestly make a lot more money for yourself when the thing actually works. I'm not here to say that one style of trading is right and one style of trading is wrong. I think that almost any style of trading can actually be successful and be profitable if the discipline is correct around how you are managing risk, how you're stopping yourself out, and how you're game planning for reward maximization. So those are the couple ways to trade it. That's the way that I probably would do it. It's not necessarily the right way or the wrong way. It's just a way that I can trade and I can feel comfortable and can be consistent for me. So I hope that helps with your question there, Christian. Whether or not it was the right thing to do to take the trade or not, which is the final part of your question, I just think it really depends more on the type of trader that you are, and if the risk is appropriate for you and for the type of trader that you are. So thanks, Christian. From Brandon in the VTF, I took a trade on Mara at 2 p.m. for a potential bounce opportunity. I got filled at 17.30, and I used the lows as my risk, which is 17.20. And I put the stop in at 17.18. Unfortunately, bottom took me out and then reversed almost right away. Do you think I should have moved my stop a little bit wider in case of a shakeout, or is this just an unfortunate shakeout? I honestly think it's a bad trade. To be honest with you, I don't like the trade. I don't see what you're seeing here in Mara at 2 o'clock that makes you want to get involved in it. This thing is just in a straight grindy downtrend. You're taking a counter trend trade, but if you're taking a counter trend trade, you really want to have a variety of factors that are on your side, or at least one of several of them. And I don't see anything that I personally look for in counter trend trades at Mara at 2 o'clock to make me actually want to be involved in this. I want to be buying because there's big downside extension on this time frame that I'm executing off of. Well, that certainly doesn't exist, right? I want to be buying because I'm buying it on the way up, meaning maybe if you saw this volume candle come in at 220 where it's actually clearing these moving averages, and if you were watching it as closely as I was, you knew that there was algorithmic selling that was going on at those moving averages, which, by the way, you were fighting when you bought this thing at 2 o'clock. You're saying, oh, wow, maybe they actually cleared up that algo selling, the volume came in, I'll buy this thing on the way up versus the low of this bar versus the low of the day. You would be taking on probably more space risk than the 10 cents of risk that you tried to put on, but it'd be a significantly better trade because you're buying it on the way up. And even this I wouldn't like, except that it has the daily chart extension. So if you're recognizing, hey, it's got this huge daily chart extension, it's down 40-something% in 2.5 trading days. Oh wow, look, this volume just came in. I'm gonna go long off that low of the day or off the low of this bar. To me, that makes a lot of sense. But you don't have downside extension on the small time frame that you can come in and try to take advantage of, similar but different to what we were doing to the short side in AMD. You aren't buying it on the way up. You're buying it on the way down. You're buying it right into these moving averages, which is always going to be a tricky buy. As a general rule, it's a general rule. You don't want to be buying weak stocks into their declining moving averages. I don't think it's a good trade. So I don't think it's an unfortunate shakeout. I think that the stock was trading down, and if anything, the fact that it happened to pivot it with a low of 17.17 or whatever the low of the day was, 17.18, is that could have been 17.18. That could have been 16.68. I think that that's almost a coincidence that you happen to get stopped out at that spot, and then the buyers actually came in. So, and I definitely don't like the idea of just kind of buying there and giving it more room either. So yeah, and then what was this initial low? The only other thing that you could have even done, which I would have understood, would be to buy it back through the opening low, but you didn't do that either. Like this opening low was 17.29. So when this thing broke 17.29, if you were watching the tape at that moment, which I was, you could actually see the sell stops trigger. And some of those sell stops were our sell stops, to be totally honest. But you could see them actually trigger. So a bunch of people are getting pushed out. So if you were buying this back through 17.29 on the way up, you're like, all right, they just shook these people out. There was no real downside follow through. I'm buying that shakeout on the way up versus the low because I think it'll actually be easier for the stock to move up now. That's a third way that the long trade would make sense to me. But yeah, generally you don't want to be buying the weakest stock in the market when it's in a downside grind, or shorting the strongest stock in the market when it's just in an upside grind. We need that extension, or we need that signal that the thing is working in the other way, in the other direction, which again is what we got at 220. But appreciate the question, Brandon. I don't think that I was ripping on you or anything like that. Those are great questions because those are the questions that enable all of us to improve. So really appreciate the question. From Dave S. One thing on the chart that I wanted to mention, actually, the chart is ever so slightly more sensitive to the NQ side compared to the Russell side. This is back to the chart that Dave was showing us earlier about the NASDAQ Russell comparison. This is because the notional value of the NASDAQ contracts is higher than the Russell contracts by a couple $1,000s. The total 428,000 notional NASDAQ versus 375,000 Russell. So these are futures contracts. This means that if the market rallies both of these at the same amount, that the chart will still trade this pairs trade to the downside. Okay, that's good. That's good information. I'm sure that it's not a huge deviance, right? I'm sure it's not huge, but in time, almost like decay, will work against a little bit. Also, I can't do it with shares because I would have to recalculate the values. I put in every single. No worries, Dave. I appreciate you posting that chart for us so regularly. Even if it's not perfect, it gives us a great snapshot on what that differentiation looks like. Thanks, Dave. All right, looks like I got through stuff in the VTF for the moment. Popping over to YouTube. Turbine saying the IWM fall makes for some good dips. Well, it does. It just matters. That's what I was looking at again with Penn this morning, like I was talking about. It just matters on if the IWM and these names can actually play some catch up. So you're mentioning Shaq. Here's another one. Shaq, which was so strong in December. This thing is really getting toasted here. Looks nothing like the spies or the Qs. There's so many names out there that look like this. This was a day 5 to the downside in Shaq. So this is one that we should actually keep on the radar for an RDR tomorrow onto this day 6. Yeah, and that's what I was talking about this morning. There's a lot of names out there that look like that. So appreciate you mentioning that Turbine. We can have some of these, day 4 or 5 downside move names on our list for tomorrow. We also got to keep in mind that they are relatively weak. From Robert, what is your thought on the QQQ 411 level? This high 413, and this most recent high is 411 quarter. Look at the 15-minute chart. Yeah, we filled at that area again today. So kind of 3 equal highs in this 411 to 411 quarter area. Strong selling since last Thursday. CPI pre-market high. Yeah, that was right in that area. 411 also. Today another aggressive selling off 411. So what do I make of it? So obviously it's an important level. It's a level that we have to pay attention to. And thank you for reminding me. I know you're correct. That's the CPI like starting point level that we like to pay attention to as well. I believe was around QQQ 411. So it's super important. It's obviously also holding as resistance, but it's in the sector that's most relatively strong. So I don't know. It's the level to pay attention to. If we can really start clearing above 411 in the Qs, then you might be setting up for this entire market to lift even further, for the Qs to make new recent highs, get above that like 413 area, which is the recent highs of this kind of bull market that we've been in, and then maybe at a certain point the IWM can play some catch up with it. The flip side is for the moment it's holding as resistance, so you probably don't want to be buying 410.60 right now, right into that 411 resistance that keeps holding. With that said, what do we know about support and resistance levels? Every time it gets tested, there's a higher probability of a breakout. So we've had 3 strong tests. Maybe test number 4 or test number 5 is where it can actually break. So appreciate the question, Robert. For the moment, the uptrend is still there. So I would rather not be short versus 411. I'd rather be looking for the long for the break. At this point, if you want the short, you probably should have it on already. Cyril also mentioning 411 is definitely strong resistance. If the midi situation doesn't improve, I can see a deeper pullback. Maybe, I don't know. It's very hard, I think, to look at these geopolitical war situations and try to take a stance on the market with it, because we've just been in so many wars for so long, and it hasn't really big picture negatively impacted the market, though obviously at a certain point things could get out of hand. But I can tell you for the moment, it doesn't seem like Microsoft or NVIDIA cares too much about the international situation. As opposed to turnkey trading here is bringing up a few of the ship names, which those for sure are names that if you're trying to trade the Mideast situation are names that you could pay attention to. The ZIM we had on the radar on Friday, and it gave a push through of resistance and failed with a negative Maribozu. So I don't really have an interest in buying. This is something I would only want to trade for momentum, and I need it to be at 14 or better, I think, to buy it on the way up. FRO I trade once in a while. I find the stock to be tricky though. 23, same deal. Failure at 23. 23 is your breakout level. That's a spot you could pay attention to. And then TNK, this one actually looks probably best. The 57 area would be a spot to pay attention to. Cyril mentioned that buyers are strong today, but the candle from when the Fed spoke was a remarkable one and set the tone for a further sell-off in the second half of the day. Yeah, at 11 o'clock when Waller spoke. We did negate that, though, when playing intraday. I don't think that he said anything new, like I said earlier. I just think it's a matter of the market needing to reprice that they, I think, overshot the amount of interest rate hikes that we're going to see. And then the question is, how well can the market hold up in that repricing situation? And the final question is, which I actually don't have the answer to, and I should know it. I don't know how much of that we've pun intended, tapered down now. Remember, I think at highs at the end of December, we were pricing in 150 basis points of cuts when the Fed was telling us 75. I know we've pulled back off that 150. I don't think we're all the way at 75 yet, but let's see. I do think that if the market begins to tell us that all we're pricing in is 75 basis points of cuts, that's actually probably a buying spot for the market. But I don't know where we're at with that. I think last I saw we were still pricing in like 1.1 or something like that on average. But if anyone has updated numbers on that, because I know that the TLT traded down even further today, that we might be closer to the market actually pricing in what the Fed's been telling us, in which case I would put that in as an argument in the bull camp for equities. Great thought process there, Cyril. Thanks for bringing it up. All right, gang. Looks like I got through everything in the VTF. Looks like I got through everything in YouTube. I appreciate the questions from everybody. It's the questions that always make these afternoon meetings great. You know, I can ramble for 15 to 30 minutes pretty easily about what I felt from the market that day and give an update. But I think that the meat of what makes our afternoon meetings really good is what comes. It comes from questions from everybody. So don't be afraid to put them in. Have a great night, everybody. See you tomorrow morning.